All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today, what I want to talk about is the title of this video, why I'm moving away from high yield ETFs. And is this really true? Yes and no. And what I want to do in this video is I want to explain kind of my goals and my intentions from the beginning. Why I started investing in high yield ETFs and why I will continue to slightly invest in high yield ETFs. But what was the main purpose of my account? My main purpose was to achieve a high monthly income. Although I'm not at my income targets yet, and I still plan on buying more Yieldmax and other Yieldmax ETFs, I want to talk about why I'm also looking to expand my horizon and potentially buy some leveraged ETFs and something a little bit more on the riskier side, buy some IPOs. So what I want to talk about in this video is my investing strategy going forward with Yieldmax, with growth stocks, and then as well with some IPOs. So if that does sound good, we're currently up to 7,721 subscribers, 119 subscribers in the past 28 days. Remember, guys, if you go to the description of this video, there will be a Questrade link, and you guys can use this referral code and you will get $50 towards your investing account. You will get $50. I will also get $50. So it's a way to support the channel, but at the same time to help yourselves, because I personally use Questrade. I find it's the best platform because I do a lot of buying, and it's very nice that they don't charge commissions on the buys. They only charge commissions on the sells. So there's your little Questrade plug. But what I want to talk about as well is this honorable investing tracking cash flow template. And the reason I'm talking about this is because this is what I've used in order to track my monthly income and to show how it's grown over the months and years. So if you look at the top here, we have 2024. And 2024 was a fantastic year where I pulled in. I started with about $12,000 and I ended in December with about $44,000 of my own money invested. That produced me a highest monthly return in terms of dividend income of $1,061.47. That is awesome. That achieved our goal of earning about $1,000 by the end of 2024. Now for 2025, I have a very ambitious goal. We kind of multiplied it by 10 to earn about $10,000 by the end of 2025. Currently, my highest month is about $1,400 American. That is a fantastic month. Of course, when you're investing in Yieldmax ETFs, you have to factor in the NAV erosion and depreciation. Although I am receiving, let's say, close to about $1,500 per month, this does not come for free. Dividends are not free. A lot of this is taken out of the share price of the company. So you have to make sure you're buying at a great price and that the dividends are not just eating away at the share price. Fortunately, so far, even though the market is down quite a bit, in all my accounts, I'm actually only down about 2 to 3% currently, which is not too bad considering the overall market within the past 6 months or so, down about 1%. We go to kind of a more yearly time frame, market's up about 8%, but within the past month, we were down roughly about 8 to 7% or so. But what I do want to show you guys is why I'm looking at potentially investing outside of Yieldmax. And it's nothing against Yieldmax. I still enjoy investing and seeing the monthly income from Yieldmax ETFs. And I still have this $10,000 a month goal, which I will likely use Yieldmax ETFs and other high yield ETFs in order to achieve. I do want to hit $10,000 a month before the end of this year. But with the recent drop in the stock market and opportunities arising everywhere, SPXL is a fantastic growth opportunity. This is not financial advice. This is simply my opinion, but I see this as a fantastic capital gains opportunity. We go back to its all-time history where we look back to even 2020, the ETF dropped to about $20 or so from about $75, $80. That's a huge drop of 75%. When the market drops, SPXL takes a huge hit. But on the upside, if you were to have bought here at about $25, you would have received returns of almost 8-fold within 4 years. Of course, that is extremely bullish and not saying that's going to happen again. But SPXL is going long on the S&P 500. I like buying the index because I believe the index produces the best returns. And I want to hold something that goes long on the index that is leveraged if I'm going for capital gains. So my whole strategy with this, I know it's a bit on the riskier side. I am a younger investor, but what I like to do is I like to continue to invest in Yieldmax, but as well dabble with growth and leveraged ETFs like SPXL. But I have to be very careful when I do invest because, of course, it's leveraged. And if I won't be using any margin for a leveraged ETF like this. I'll only be using cash. Currently, I have about 23 shares, average share price $163, but I'll be looking to average down as the market drops if it drops. But let's talk about that. So we talked about high yield ETFs. I will continue to buy. I will now be looking to buy more SPXL soon. I haven't bought any yet, but that is kind of my growth stock territory. And then what I want to talk about is my last one, which is IPOs, initial public offerings. These are companies that are private companies that have recently gone public on whether it's the NASDAQ or the New York Stock Exchange, allowing investors to become shareholders in the company to raise capital. Now, if you are potentially investing in IPOs, there is a lot of risk with that. For example, one IPO that I actually just bought, I bought 220 shares of HIT. Of course, don't take any of this as financial advice. This is simply what I did. It's health and tech. And I bought 220 shares. Each share I got for 73 cents. It's actually down today about 11%, as you can see, and I'm down about 6% on my position. So why did I buy? I bought because I like to kind of dabble into some IPOs. And I understand with the market being shaky, that is very risky. If we do have a market correction, IPOs will likely be extremely volatile, even more than they already are. So you have to be very careful. And I'm investing within a company which I believe has positive earnings and has potential for the future. Their earnings per share, only a cent right now. When we jump to their financials, we will see how they perform. But HIT, health and tech, is basically, they are in almost like an insurance broker, but they're not an insurance broker at the same time. Basically, they help companies produce their own insurance policies for employees within the United States, which I think is fantastic because I think healthcare within the United States, as it mentions here, to combat the rising costs. But basically, they help their employers create plans for their employees in order to ensure good and proper healthcare, which is something that I think is very important. I like their mission, and as well, I love their financials for an IPO. You can see here that their revenue is growing year over year. Of course, their cost of revenue is growing as well, but not nearly as fast as their total revenue. Their operating income, it's positive. It's an IPO. It's more so a newer company, out since 2014. I don't have all the information down because I'm still learning about this company. That's why I only did a $150 investment. But you can see their total assets are growing pretty nicely. You'll notice in 2022, about $30 million in assets here. Their total liabilities, about $27 million, okay? But although their total assets have decreased, their total liabilities have significantly decreased. And that as well goes with the sense that they do not have very much total debt, which is something that I love to see for an IPO. I think it's very difficult for a company to go bankrupt when they don't have very much debt, as Peter Lynch mentioned in a video of his that I see. But you can see here the operating cash flow growing year over year, which is great for an IPO. The end cash position absolutely exploding. Free cash flow is doing well. And this is an IPO. You won't find many IPOs that are like this. That's why I purchased it. But because it's a risky investment, I only bought a small amount. But that's all that I wanted to show you guys. I'm investing in Yieldmax. I'm investing in growth leveraged ETFs. And then I'm looking to potentially invest in some IPOs. And the whole reason on this is to kind of diversify my portfolio a little bit. But at the same time, if I'm investing within the market, it is already pretty much diversified. But all this just to kind of take advantage of different areas within the market and use the dividends that I've been accumulating in order to buy more amazing companies. So that was kind of my whole ordeal. If you guys did enjoy this video, we're up to something like 7,721 subscribers if I do remember. Please do remember to subscribe. Enjoy the video. Keep me posted on this template because I am doing some work on that. I'd like to get it to you guys soon. And I hope to see you guys in the next video. Please do take care.